Ta-da! Hey, ladies and gentlemen, boys and berries and girls, and so we're having some trouble with Facebook. It looks like I had problems with that this morning. So fortunately, we've got LinkedIn and YouTube, and we've got the recording that's going on. But today we're going to be talking more about passive income. Some people think it's real, some people think it's fake. It depends on your perception. That's kind of magical in and of itself. So I'm going to go into the green room, and I forgot how to pronounce his last name, or I never really knew, but I'm going to guess at it. It's Kawaoka. See if I did a good job. See if he's there. Where is he? You there? Lane?
Hey, you got it. Got it
Is that how you
correct.
pronounce your name? Kawaoka?
Perfect. Perfect. But
See? Here we go. Well, this is going to be a lot of fun. I go back and forth, like I mentioned in the introduction there, that some people don't think that passive income is the thing because they think, well, you got to work and then you get. It's a matter of perception whether it's a passive income thing or not. So, you said that you're over in Hawaii. Is that correct?
that's correct. Live where you want, but invest where the numbers make sense. I'd never invest in Seattle, California, or Hawaii. The numbers just don't make sense. Or New York either, for that matter.
So, when you say invest, you talking specifically? I saw some stuff about real estate. You talking specifically real estate?
Exactly. We buy workforce style housing. So housing for the lower middle class
Mhm.
because it provides great returns and reliable cash flow. And that's how we create passive income.
You know, my background is in the event industry. The whole MagicBrad thing, that's from being a magician that got me in the event business. And then I've got what I call entrepreneurial ADD. I'm always looking at different things, and my wife was trying to keep me in line. So I was going into events, hospitality, travel, and tourism. Four different things, but they're similar. And then COVID came along and says, you can't do that. So I actually thought, I wonder if I had to get into real estate, because real estate, you need it. You need a roof over your head, no matter whether it's commercial, residential, or storage lockers or vacation homes. You need real estate. So real estate's a good investment, I think.
That's correct. I mean, it's something that everybody can manage and operate, especially when you get a professional property manager to do all your dirty work for you.
Mhm.
I own over 6,000 rental properties, and I don't know how to unclog a toilet or evict people. That's what you pay the professionals for. But to be able to do that, you got to buy the right properties at cash flow so you can pay people to do this stuff for you.
And like I was at a real estate investors group, and a lady was bragging about how she just got this house, and she's going to make about $20,000 off of reselling it. And then she found out that the boilers were bad, and she had to replace them all. And all of a sudden, there goes your profit margin. So you need to know about that stuff going into these things. Is that something that you help people with, to
Not
know all the things that
not
might happen?
necessarily, right? Like maybe we'll kind of start off the top, right? When you think of real estate investing, a lot of people think about the H stuff they see in HGTV, house flippers, or in that person's case, wholesalers. In
Mm.
my opinion, that's what you do when you don't have money, right? You got to make money, and there's a lot of things that you can do in the real estate world, but they're more like jobs. Most of my clients are people who are successful in different avenues, like their jobs, or careers, business, and they have money, but they parlay that into real estate investing for the tax benefits and the passive cash flow there. So, you're going to need at least 20% down payment. I'm sure there's a lot of ways you get no money down that don't really work out there. But most of our clients are pretty high paid working professionals. They have a decent amount of net worth, and it's just a buy and hold strategy. But you need some money.
Oh, absolutely. They say you gotta make money, you spend money. This is for those that don't know, simplepassivecashflow.com. That's Lane's website there, Simple Passive Cash Flow. I also noticed that you do some events and things. Are these events and masterminds or retreats and things that you share this knowledge with people?
Yeah, I mean, so what we do, we put together apartment syndications for folks to jump in if they're qualified. And on my website, there's just a whole bunch of free stuff. I started investing with a rental property and then remote rentals because for most people out there, a lot of my clients are in California, Hawaii, Seattle. You're not in a place where properties will cash flow. We're looking for properties with a 1% rent to value ratio or greater. So you take the monthly rent divided by the purchase price, and you need that 1% to be able to pay your debt service and cash flow on a monthly basis. And at this day and age, I mean, the only place you're going to be able to cash flow are what we call secondary and tertiary markets, like places like Birmingham, Atlanta, Indianapolis, Kansas City, Memphis, Little Rock, like less well-known places like that. And likely y'all don't live there. So we start a lot of people off with remote investing. So
Mm.
there's a lot of information. Like my podcast started back in 2016, teaching people how to do that. But as I became more of an accredited investor, started to invest more as a passive investor in large syndications and private placements where a group of people would go together and take down a 200, 300, 400 unit apartment complex in that fashion.
Yeah, that's what stopped me from getting involved with real estate is the math part of it because I wasn't very good at math when I was in school. And when you got a lot of those different moving parts, if you miss one of those moving parts, that could be like someone would think, I'm going to go for the big bucks, so I'm going to go invest in Beverly Hills. And what you're saying there, that's probably a big mistake.
Probably. I mean, a lot of places in California, you'll be lucky to find a place in the ghetto for 400 grand. That would rent for about 2,000 bucks a month, right? So 2,000 divided by 400,000 is 0.5%. It doesn't take a scientist to figure that out. That's no bueno. That ain't going to work. That's less than 1%. But once you find a 1% rent to value ratio property or greater, you need to kind of put it into the analyzer. And if you want, you guys can download it for free on my website, simplepassivecashflow.com/analyzer. I even got a YouTube video teaching you how to use the damn thing. It's not that hard. And for accredited investors, it gets even more easier because you leave it all to the pros to figure out which properties work and you just jump in.
Well, definitely it's not that hard, but I kind of look at it like there's a lot of moving parts in these things, and it's like a car transmission. If one gear is not turning, neither do the back wheels. So you got to make sure you got all those things in places. So maybe there's this software that you've got that can kind of help people with stuff like that, so they understand all these things. You don't want to miss something. That's part of my fear, I guess, of getting involved with real estate is making a mistake.
Right, right. I mean, when you're starting out and you're buying rental properties on your own, when your net worth is lower, I mean, yeah, you've got to do this all yourself. But no better way than to learn. But I would say get educated first. Read the blog article, read podcasts on that, play around with the numbers. Analyze 20 properties, figure out how the spreadsheet kind of works, right? How the numbers impact each other. But for more accredited investors, I mean, again, you don't do anything. You just invest your money. You kind of just put it like how they've created the stock market, right? You just throw your money in.
Yeah, I'm invested in REITs. I've got money in real estate investment trusts because I don't have to know anything. I just got to wait for it to fluctuate and it seems to climb. So I'm okay with that. But what are your thoughts on some of these people that are doing these Airbnbs and VRBOs and they're buying properties and renting them out? Do you think that's short-lived? Do you think the authorities are going to put the brakes on that kind of stuff?
I think possibly yes, and that's why I'm not in a business like that, right? Like where the government's pretty much got me by the cojones
Yes.
doing that stuff. I invest in workforce style housing, so housing that caters towards the masses, the majority of America, which is the lower middle class,
Mhm.
renting $700 to $1,400 a month apartments and homes. Whereas short-term rentals, the Airbnb, VRBO stuff, I mean, it seems like great returns until it doesn't, right? It's a very discretionary item. When there's a recession, what happens is people stop going on vacation, right? They stop spending money on that stuff, and you're screwed as that type of investor. But as a more workforce style housing investor, I mean, in fact, the business kind of gets stronger because the people that owned houses, they get foreclosed on, or people in the nicer stuff come back to the more B class, the middle of the rung stuff.
So that makes sense. It's sort of more a marathon and more of slow and steady wins the race kind of thing, the tortoise and the hare kind of deal. Like I've got a friend that lives out in Temecula, and he had a bunch of guys that got together and invested in a property next to his, and they turned it into like a resort. And eventually the city's going to say, you know what, you can't be having these parties at 2 o'clock at night. There's neighbors here, and this isn't zoned for commercial. And you built like a hotel. Eventually that's going to collapse, I think.
Yeah, yeah. It doesn't sound like a really long sustainable business to me. I
Yeah.
mean,
It's a
in
quick,
anything, I
cash
like
flow.
just stay in the middle ground, right? Like, what is the stuff that majority of people of customers out there like? I mean, it's just no different than making a product, right? You're trying to make the product for the masses.
Right. Okay, that's making some sense. So you're looking for the lower to middle class where people are just looking to get out of the apartment, or they all need a place to live. They just want to be off the streets and into a house. They
Yeah,
don't need to have a big mansion.
yeah. So yeah, we stay away from the high end luxury stuff, and we also stay away from the low end, right? The war zone type of properties. We find that there's a nice little sweet spot in the middle.
I like your terminology, the war zone type properties. that makes that makes sense. You're the ones that are all run down. It looks like a bomb dropped on them, right?
Yeah, well, or you gotta, carry a gun to go collect your rent, right? In those types of areas.
Yeah,
Um,
yeah, yeah, yeah. So you're talking about like multi-family dwellings, like apartments and things, or are you talking about single-family homes?
yeah, I mean, when I first started investing, my first 11 properties were all single family home rentals, which I would recommend most people get started with. But today we buy large apartment complexes. We employ third party commercial property managers. For us, we like the scalability. We have people at the site all the time. We never hire third party plumbers, HVAC guys. We all those guys on staff on their salary. And we can kind of control the community, right? Because it's all ours. We have like more than 200, 400 units. Um, that's kind of the work we kind of stay in, but we stay away from like larger assets, the 500,000 unit properties, because those are the properties that the REITs and the large institutions will own, right? A lot of those guys are just kind of investing dumb retirement money, and they have high fees and less returns for investors. So we kind of play in this realm between two big enough that we can get above the mom and pop investors buying little single family homes, duplexes, even 20, 30 units. We stay above those guys and get better pricing than them. And we also stay below the large people
Got
that
it.
are just kind of throwing money out there.
So you try and stay in that sweet spot, and you make these little adjustments. And is this property going to work? And do the numbers fit work? So you get a property management company in there, and the higher caliber maintenance type people, because you don't want the tail light warranty contractors coming in and
Yeah, and that's unfortunately when you're like a mom and pop landlord, that's the people you're dealing with, right? Like the
yeah.
little like guy who drives his truck around. I mean, we work with a large companies that are have good balance sheets and have systems and procedures in place.
So is there a way to then, if you're just getting started in something like this, is there a way to quantum leap over that kind of stuff, or do you have to start in the trenches and risk dealing with these taillight warning people?
Yeah, I mean, so when I had 11 rental properties, I realized that owning little rental properties isn't very scalable. I mean, it's how I got my net worth to be accredited status and above. But I mean, once you get past that level, you start to realize that owning little rental properties just isn't quite scalable. And that's where I uncovered this world. And I joined different masterminds, and I realized a lot of high net worth investors, between $1 to $10 million net worth, were investing in these things called syndications and private placements, where they would go in with maybe 20 or a couple hundred investors, and there'd be a general partnership that kind of pulls together the deal and all the investors and operates it on all the passive investors' behalf. So the passive investors don't have to do anything and can just put pay their money, get on the airplane, and go to sleep and cash your checks.
Yeah. So what's the low end of an investment that a person would be able to invest into one of these syndicates?
I mean, they're private placements for a reason, and there's not really any standard, right? But for the most part, I mean, typically you're looking at maybe $50,000 minimums up to 250,000 minimums. And these are for people who are traditionally over $1 million net worth. So one of the rules that I have is never invest more than 5% of your net worth into any one thing. You want to be diversified.
Well, that's pretty low. 5% is all you'd.
Well, if your net worth is a couple $1,000,000, 5% is about
Yeah, but it's
$25,000.
not.
Yeah, it's not, or $100,000 actually, right? But when you're starting out, that's the hard thing, right? I mean, you might have to bend that rule a little bit or get more experience by owning rental properties yourself. But then now you're the person managing the property manager, kind of on that front line of
Well, that's the thing that's definitely held me back is the concept of knowing all that paperwork and all that terminology and stuff. That just that we just bought a house about 3 months ago, just moved, and now we're in a home, and all those little initials you got to do in that contract. You got to put your. That's just signing the mortgage papers. That's overwhelming in and of itself.
yeah, yeah. I mean, that's unfortunate how the world works, right? Like in the beginning stages, this is kind of the hardest part. But
But it's nice to work with someone like you and your organization that you kind of know that uh, how to do all that, and someone can trust what the advice you're giving them. With what you're doing, is it different in all these different states? Considerably different, or is it basically the same?
that's why we like it. It's basically the same. We'll target places where, I mean, we typically target more red states because we want the landlord friendly laws on our sides, um, where it's, we can evict people that don't pay. For example, typically red states are typically more economically driven, and that's what really drives population growth. And that's what we like about real estate. It's not rocket science. That's where the population growing and where the pockets of growth, and that is where we invest. Very very simple.
Yeah, when the COVID thing came along and all these people are not making any money, yet they're still having to have rent and they weren't paying rent. I was wondering what's going to happen with these apartment complexes when nobody's paying for anything. Eventually, something's got to collapse. So you got to broom those people out of there and they got to go live with their mom or pool together or something to find a place to live. You can't just have a bunch of squatters.
Yeah, I mean, it's not that big of an issue, right? Like I think the media is always selling the narrative, right? Which
Yeah.
is like, hey, this is what's happening out there. You should watch our news tomorrow and figure out how this changed. But over our like 6,000 unit portfolio, I mean, normally we collect 97% of the rents. We're always going to have a few deadbeats that are late to pay or don't pay, but that's just part of the business. But in the worst of COVID, early last year, I would say at worst it dipped down into the mid 90% range. So, not a huge thing. I mean, we still cash flow a lot of times if we can stay above 60% occupancy, which is why we do this in the first place. But again, like a lot of the places that we'll invest with, like Arizona, Texas, Alabama, Georgia, the tenant profile is not like like the folks in Socialist Republic of California, right, where they're trying to get a freebie out
Right.
there. Um, it seems like the tenants a little bit more, honor base. Um, they kind of know how things are, and you can still evict people. I mean, there's just even though that's the narrative in the news, and that's still called the CDC says. I mean, unless the tenants exhaust every single last option, which they never do. I mean, you can always do what is kind of proper, which is when way I was taught growing up is if you don't pay, you can't stay.
Yeah, totally makes sense. I mean, some people for some reason justify that kind of thing, but you got all this vacancy. Why not house everybody? Well, somebody's got to pay for it. Somebody's got to pay for the heat and the water and electricity and all that kind of stuff. So,
Yeah.
and I guess most of society understands that it's a transaction kind of thing. So, folks, this is who we got. We got Lane with simplepassivecashflow.com. You can go to his website and learn more about what he's got going on. Is there anything else that you could share with us that might be of interest before we?
Um, yeah, passive income is kind of one of those elusive things that people talk about, but to get passive income going, you either need to have money or you need to get lucky and create some kind of invention or intellectual property. I think the latter of the two, I mean, is you got to get lucky doing it. But when you're buying passive cash flow streams from real estate, the hardest thing is just getting the money together and acquiring the asset and letting it do its thing. especially when you focus on 1% rent to value ratio properties. People want to learn more about this. Check out my podcast, simplepassivecashflow.com. And if people want to get my free remote rental light e-course, they can text the word remote to 314-665-1767.
Perfecto. Well, Lane, I'm going to put you in the green room. If you want, we can have a little chat and I can share more about how I go about doing this. But other than that, I'm going to sign this one off and beam it up to the universe and get people seeking for it.
All right. Thanks
for taking the time, bud. Well, that was Lane again with simplepassivecashflow.com. It's always been intriguing to me. And one of these days, I mean, I'm 64 years old. I don't know if I'm going to get into real estate now, but maybe. So enjoy the rest of your day. Be good. Be nice. Be safe. Peace. See ya.